Good morning, good evening, good night, wherever you're watching this transmission. It is I, Mike Martins, bringing you another Markets Are Crashing Around the World. So this is from CNN, Counterfeit News Network, or the Clown News Network, or the Clinton News Network. What more better than to get it from the fake news directly and see what they have to say. Stocks in Asia and Europe sink as fears of slowing growth. Let's see what this says here in this video. There's a video here. There's your bull.
It is the 10th birthday of the current stock market bull run, the longest in history. A bull rally born on a day when no one was celebrating.
Yeah.
March 9th, 2009, when the Standard & Poor's 500 tanked to 676.
Wolf, more devastating news for investors. The Dow and the S&P are now
I remember this.
at new 12-year lows.
From recession to recovery, this is what it looks like. The S&P 500 has more than quadrupled. History made all along the way. A financial crisis that required a bank bailout, stimulus, tax cuts, an auto bailout, a new healthcare law, debt ceiling showdowns, and a credit downgrade of U.S. debt, a budget sequester, and then Democratic control giving way to a GOP hold on Congress, and ultimately the White House. More recently the Trump rally, a 40% rise from election day to recent highs, riding a wave of job creation, tax cuts, and slashed regulations. And once again, control of the House shifts back to Democrats. The big question, the only question, is will the bull live to see 11 years old? The S&P 500 lost 6.2% in 2018, the worst showing since the Great Recession. And 2019 is a year with three big challenges. Uncertainty about the global economy, particularly in Europe and China. Trade tensions between the U.S. and China have yet to be resolved. And investors are worried about interest rates. But the Federal Reserve has pivoted from scheduled rate hikes to a more market-friendly approach of patience, which could keep the life in the bull for a little bit longer.
So that's from CNN Business, people. Sorry, that was from CNN Business. Okay, I don't know why it's playing other videos now. Okay.
How much of a price?
All right, let's see here. So, stocks dropped sharply in Asia as investors reacted to the disappointing manufacturing data from Germany on Friday and a warning signal that the U.S. recession could be on the horizon. Japan's Nikkei N225 closed down 3% on Monday, while Hong Kong's Hang Seng HSI shed 2 points. Fears of the severe global economic slowdown hit stocks in Europe and the United States on Friday. The pain continued Monday, with the benchmark indexes in Europe closing with mild losses. U.S. stocks also dropped through the ended day, essentially unchanged. So, guys, remember, the system is rigged. It's rigged against the typical Joe Donuts. The typical Joe Donuts doesn't know it, but they're starting to understand, and people that work their way through life and work hard are starting to realize that they're not getting anywhere with working. And what is happening? Well, they're going to start confiscating money when negative interest rates start coming into effect, right? So, fears about the severe global economic slowdown that hit stocks in Europe and the United States. On Friday, the pain continued. I read that. The new bout of fretting over the health of the global economy follows big rebound in stock markets. Given just how strong equities have rallied this year, it is not surprising that investors were already questioning how much further they could go, said Craig, global market strategist and JP Morgan Asset Management. U.S. stocks on Friday suffered their worst day since early January after a yield of a 3-month Treasury rose above the rate of a 10-year Treasuries for the first time since 2007, a flattering yield curve, or the difference between short and long-term rates. So, I mean, you could just make the same in the short term, then why lock things up for 10 years, is typically seen as the site of a long-term economic confidence is dwindling. So not only that is there's, that consumer confidence is severely down since 1975 along the Anglo-English speaking world. And with our houses being bought out and people jumping onto these asset bubbles they couldn't compete with laundered money, it's becoming a problem. Now, right now that the EU is buying its own government bonds again, that I mentioned that in another video a few videos ago, that the EU is buying its own debt back. So it's becoming like a banana republic where it just buys back its own debt and it inflates its currency and basically steals the wealth from the common middle class working poor. An inverted curve has been a reliable predictor to coming to the U.S. recession for decades, but markets experts advise that investors against panicking for the time being. Strategists and Commonwealth Bank of Australia said that while the inverted yield curve is an ominous sign, they aren't predicting U.S. recession anytime soon. Craig said that he interrupts the U.S. bond market move a sign of slowing economic growth around the world. This means that we don't expect the market to collapse, but neither do we expect equity returns to be inspiring from there, he added. Trade war, deal or no deal? After a brutal December, the Dow's INDU, worst since the Great Depression, many stock markets around the world have surged this year as investors have become more optimistic about the health of the major economies and the prospect of the end of the damaging trade war between the United States and China. Chinese shares, which had a terrible 2018, have performed particularly well. The benchmark of Shanghai Composite, which had gained about 25% since the start of the year, fell 2% on Monday. Analysts said that the outcome of trade talks between the United States and China is more significant for stocks in Asia than the shift for the U.S. bond market. A couple of basis points inversion between 3 months to 10-year yield bonds does not an impending economic Armageddon make? Jeffrey Haley of Singapore-based analyst online trading platform Onda said in a commentary, a deal or no deal. Over the trade between Washington and Beijing remains only real game in town, he added. Negotiations between the two governments aimed at resolving the trade war will resume this week. The top U.S. officials due to hold talks with their Chinese counterparts in Beijing this Thursday. A Chinese delegation is scheduled to go to Washington for further talks in early April. Negotiations had been on hold as the two sides tried to figure out how to overcome disagreements about how the United States would ensure China is abiding by any deal. U.S. concerns about how China goes about getting hold of American technology and trade secrets also have been a sticking point. So, lots going on here, guys, with the markets. So, basically, in my opinion, this is just my opinion, guys, and what I think. What they need to do is they need to continue putting money into the system to continue for this Ponzi scheme to keep going. So they're going to have to keep pumping market, like she said in the thing, with quantitative easing and recordly low interest rates, and bailing out the banks. So they basically artificially lowered rates and took that money to bail their friends and the banksters out. You know what I'm saying? And so they got to keep it going. So they got to keep pumping money. Now they're gearing towards negative interest rates. And then this is a good sign with the EU buying back its own bonds, government bonds back. That is a problem. And I think they'll start confiscating money when it gets to it. Negative interest rates. Like I said, the system is totally rigged against the ordinary person. Well, how do you hedge against it? Bitcoin, silver, gold. I mean, there's so many ways to move your money off grid. But I'm just telling you what's happening with the markets. It's a very, 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 very... Everything's lined up for a perfect storm, as I've been saying for years now. And the problem is, here's the problem. If you want to take 2 steps back, it's the millennials. Okay, this is my opinion, okay? It's the millennials that have suffered through this whole fiat system. And after 2005, the student loans were unable to be written off as a loss. And I think in Canada, once the government took over the student loan business, you can't expense it as, or you can't write it off as a loss through bankruptcy, right? So, I don't know. It's very scary where things are heading with this, and you know, just artificially decreasing rates was a huge deal, guys. And it's never been done in human history, and now the entire middle class is impoverished. You know, and then when they're saying, well, we got this economy and it's on a record. Well, there's a phony asset bubble built on the first asset bubble, right? So it's housing, stocks, commodities, currencies, it's all built on another phony bubble. We're going into our third bubble now with banks looking to lower interest-only mortgages again. And when the bank portfolio is loaded with interest-only mortgages, all I have to say is this. That's all I have to say. Run to the hills. So, and like I said again, when the average Joe Donuts is short on cash, he sells his assets, right? And if the government and the banking system is short, or there's some sort of a hiccup, they just print off more money. And when they print off more money, they're stealing our futures and devaluing our currency and the fractional reserve. We get into so much. I'm not going to get into it. Let me know what you guys think in the comments below. Is this a little trickle, or is this just a flash in the pan? Nothing happened, and it's going to go back to normal. What do you guys see the next where the market's going after Q2 and Q3 of 2019? I would like to know. Comment below, or well into 2020. I'd like to know. Comment below. Thanks for watching, guys. And if you want to support the transmission, just share one of my videos and get me out there. I'm not the greatest guy on earth to give you guys this information, but I've been seeing this going on for years. And the fact that there's so much government intervention, instead of leaving the markets and the housing markets and on autopilot and letting them crash and then readjust and crash, they've taken it off autopilot and they've taken control. They've created a monster like Frankenstein. Now what's going to happen now with Frankenstein now that it's been created? They've created their evil monster. What's going to happen now? Comment below. Let me know.